us from our office in Paris. It's the company's Chief Financial Officer, Paul Tufano. Welcome. Thank you for joining us today. Now, behind these very strong profits was strong demand from the US, in particular in the third quarter. What's driving this, and do you expect it to continue?
Well, if you look at the demand, not only in the U.S., but the rest of the world, we're seeing the growth in data traffic, especially video, exploding around the world. And that is driving the need for more investment in network upgrades. The U.S. has been at the forefront of that, but this quarter we saw actually growth increasing outside of the U.S. We saw Asia-Pacific coming back, with China in particular growing again. So I think this is a global trend that is based on the macro desire of consumers to have video anyplace, anytime. And broadband is going to be a key for quite some time to come.
Now, how is Alcatel doing? You talked about China there, but what about in that race for network equipment contracts with Chinese companies like ZTE and Huawei? How confident are you in those markets?
Well, we're very confident about our ability to grow in China. In fact, today, with the Chinese Premier's visit to France, we're going to sign a $1.2 billion frame agreement with the Chinese, 3 Chinese vendors to supply a variety of equipment to upgrade their network. So we are very well positioned in China, and I think today's frame agreement announcement is indicative of that.
Now, despite those profits, the shares are a little bit down today. There are analysts saying that they were expecting a higher operating margin. What do you say to that, and what are you going to do to address it?
Well, I think we've made some great progress over the course of the last 2 years in improving our cost structure. Year on year, our overall gross margins are up 40 basis points. There has been a significant trend upwards over the course of the last 6 quarters. And I think that as we continue that cost focus to reduce our fixed cost as well as our cost of our products, you'll see the margin expand appropriately. And so I'm pretty confident in our ability to have expanding profit margins.
Now, part shortages have been an issue, not just for you, but for other companies as well. How far along the road to addressing that are you? And indeed, how much does it cost you?
Well, the industry is suffering from a component supply problem, and that is not getting better as we speak today. But I think we've done a pretty good job internally of working with our suppliers, working on our internal processes to be able to maneuver around some of these component issues. We saw very strong revenue growth this quarter, almost 11%, and I think that's indicative of our ability to maneuver around some of these component issues.
Paul Tufano, thank you very much indeed for joining us today.